Medical Properties Trust, ticker symbol MPW. Is this the best dividend stock to buy right now? MPW stock is down 36% year to date, which is quite a lot in general, but also compared to the S&P 500, which is down 15% year to date. In the most recent earnings, MPW stock missed on FFO and revenue, so that's quite interesting. But the reason why people still love MPW is because of the dividends, of course. What about the 7.7% dividend yield? It's insane high. But does this also mean that when the stock price went down a lot, this stock becomes a buy? And how about the future of the business? In this video I'm going to show you real quickly what MPW does, the historical returns, the fundamental analysis, dividends, their major competitors, and in the last part I'm giving you my price target to see if MPW stock is a buy or not. And I think you definitely want to see that part, so make sure to watch until the end. And I'm also very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. This stock was requested by Corey Hillegas, so thanks for requesting this stock. To all the other investors, please send me your request in the comments. I really like to see what kind of companies you like to be analyzed. So, what does MPW do? Medical Properties Trust Incorporations is a healthcare facility REIT. The company operates one segment, which owns and leases healthcare facilities. The company considers merger and acquisition investment as a component of its operational growth strategy. When we dive in the latest earnings report, we see a lot of interesting things. First of all, MPW has a total portfolio of 22.3 billion within a unique industry since it's a healthcare REIT. They own 447 facilities in 10 different countries and licensed around 46,000 beds. 72% of the portfolio are general acute care hospitals, while 11% are behavioral health facilities, 9% are inpatient rehab hospitals, and then we have 3 smaller segments as well. Around 61% of the assets are within the United States, 18% in the United Kingdom, 6% within Switzerland, which is quite a lot for this small country, and 5% in Germany, and then some others as well. More than 90% of the total base rent expires after 2031, which means they have a solid portfolio for the coming years. When we check the revenue breakdown, we see that general hospitals bring in 75% of the total revenue. Behavioral brings in 11.5%, and inpatient rehab brings in almost 10%. In this graph we see that the hospital industry is still growing in revenue, but it has to be said that it's at a slow compound annual growth rate, but that's okay. For me it's very important that the net income and FFO are increasing, and in this sheet we see that income went up from 140 to 189, which is an increase of roughly 6.5%, while the funds from operations went from roughly 205 to 274, which is an increase of 33%, which is quite the difference with the net income. If we check the data per diluted share, we see that FFO went from 0.35 to 0.46 and from 0.43 to 0.46 normalized FFO, which is covering the dividends quite nice, because dividends are sitting at $0.29. This comforts me a lot already. For the outlook, we see that MPW is maintaining its estimate of per share net income 1.88 to 1.92 and the NFFO of 1.78 to 1.82, and this also covers the total dividends of $1.16 annually. And now that we know more about MPW stock, it's time to check the historical returns to see what happened there. I decided to include the S&P 500 as a benchmark, and also 2 competitors which are HR and OHI. On the 5-year chart we see that MPW stock returned a 57% including dividends, which is quite disappointing. But we also see that in this chart that it outperformed the S&P 500 before, but this year it's going not so well. The S&P 500 returned 81% over the past 5 years, and both HR and OHI underperformed the S&P 500 and also MPW stock. On the 1-year chart we see that MPW returned a minus 19%, while the S&P 500 returned a minus 7%. HR returned minus 9% and OHI returned a 7.8% positive return, which is quite interesting. On the 6-month chart we see a minus 25% return for MPW and only a minus 6.7% return for the S&P 500. HR is again down with a minus 60% return, while OHI returned 18%. On the 1 month chart we see that MPW returned a minus 10%, while the S&P 500 had a positive 3% return. HR also returned a positive 3%, while OHI returned 5%. So MPW stock didn't do a great job in the past couple of quarters with the returns. But how about the future of this company? Is MPW stock a buy at current fundamentals? Let's find out by checking the fundamental analysis. But first, if you made it this far into the video, I want to thank you a lot for watching this video. I also want to mention that I'm almost at 1000 subscribers, so help me achieving this huge milestone by giving me a subscribe. In return, you receive similar analysis to this one every week. Let's continue by diving into the fundamentals. MPW is a 8.96 billion market cap company with a PE ratio of 7.48, which is below the 5-year average, and of course quite logical since the stock went down quite a lot as well. But since MPW is a REIT, I want to use a different metric to see its valuation, which is price divided by FFO instead of earnings. And then we see that MPW has an 8.69 price to FFO, which means it's undervalued based on this metric, so I like that a lot. Next up is revenue. MPW has a 12 trailing month revenue of 1.6 billion. And in this graph we see that the revenue went up really nice and steady, so I like that a lot. But please keep in mind that the revenue took a big jump during the lockdown periods, and it's not really likable that they will sustain this growth. See, eventually revenue will pick up the slower pace of before. Net income is at 1.2 billion, which gives us a profit margin of 74%, which is insane high, and also higher than the 5-year average of 61%, which is also very high. But I expect that this profit margin will go down in the coming periods to normal levels, so keep this in mind. Next up is return on assets, sitting at 2.9%, which is below my 10% minimum. But to be honest, it's very common for REITs to have lower numbers in this section, so I don't mind that much. Return on equity is at 13.9%, which is quite nice. Return on invested capital, the most important number here, is at 4.3%, which is significantly higher than the 5-year average, so I like that a lot. But it's below my 10% minimum again, but this is very common for REITs. Next up is the balance sheet. Right now they have 257 million in total cash, 790 million in operating cash flow and 1.9 billion in leverage-free cash flow. I prefer companies who can pay down at least a big chunk of their total debt. But since this is a REIT, it might be a bit different, since REITs have higher debts in general. Right now debt is at 10 billion, which is quite a lot compared to the total cash position. So keep a close eye on this number and check it every now and then. You don't want debt to become bigger and bigger while free cash flow isn't growing along with it. But to be honest, I really like the free cash flow growth of MPW. It's growing at a nice and steady pace with a big spike in 2018. But other than that, it's very consistent and it's very important that free cash flow is growing, since this is used to pay down debt, buy back shares, do acquisitions and all other things to grow the business. Next up are the dividends, one of the reasons why people love MPW. Right now dividend yield is at 7.75%, which is really high. They pay you a $1.16 annually, or $0.29 each quarter per share. Earlier we saw that FFO is at $0.46, meaning we have a payout ratio of 63% instead of the 57% that is displayed here. But still, this is very good for a REIT. The 5-year growth rate is at almost 4%, which isn't the highest to be honest. But since dividend yield is already really high, I don't blame them. On top of that, they grew the dividends for 9 years in a row. Overall, I think this could be a great dividend play. Next up are the fundamentals of MPW versus some competitors. I decided to include HR and OHI. The first thing that we see is that all companies have a similar market cap. Next to that, we see that MPW has the lowest PE ratio. MPW has the highest revenue growth year over year, but also the highest revenue compound annual growth rate. But both HR and OHI have the highest net income compound annual growth rate. MPW has the highest leverage-free cash flow compound annual growth rate, so to me, MPW is definitely the winner here. All companies have a lot of debt compared to the cash position, which is very common for REITs, as we discussed earlier in this video. And now the good part, the dividends. OHI has a slightly higher dividend yield, but MPW has the lowest payout ratio and the highest dividend compound annual growth rate. On top of that, they have the most consecutive years of dividend increases. So to me, MPW is definitely the winner here. Overall, it seems that MPW is doing a better job than the two other healthcare REITs. But keep in mind that there are of course more competitors, so this doesn't mean that MPW is an instant buy based on this quick comparison. Let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. Definitely check them out. I need to fill in a low, mid and high assumption, but keep in mind that with a REIT it might be as not as accurate. For the revenue growth, I expect things to slow down a little bit, as we saw in the revenue growth pattern. So I'm filling in 6, 8 and 10%. For the profit margin, I'm also expecting lower numbers, so I'm filling in 54, 57 and 60%, which is still pretty good for a REIT in general. Same story for the free cash flow margin. I'm filling in 48, 50 and 52. PE ratio is at 7.5 right now, but I think 10, 11 and 12 are more justified here. Same story with the price to free cash flow. Normally I put in 12.5% for my annual return, since I can get an easy 10% average return with owning an ETF. But since this is a REIT, I want a higher margin of safety, so that's why I'm filling in 15%. So to be honest, I'm a bit conservative on these numbers. Right now, MPW stock is at $14.97 a share. Let's call it 15. I hit analyze and we see a lot of green numbers. We have a low price target of $14 to $15.95 a share, which is around the current valuation. We have a mid price target of $17.5 to $20 a share, and a high price target of $21.7 to $25. So if you believe these numbers, then MPW stock is a buy. I think the low to mid range is the most justified here, since I expect things to slow down a bit. The hospital industry isn't growing at high numbers, so keep this in mind. But even with a low to mid price target, it could be a buy if you believe these numbers. My final conclusion on the stock is that it's a really interesting dividend player. With a dividend yield of 7.75%, you could have a steady dividend income. On the other hand, REITs could be very volatile, and you need to check a lot of things, since it can be complicated sometimes. Overall, I think MPW is an undervalued stock, so I'm adding it to my watchlist for now. And keep analyzing this company in the coming periods to see what happens. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and it did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.